Well, the Bitcoin versus gold debate continues to rage on. Which one is a better store of value? Which one is a better speculative asset? Which one serves as a better investment vehicle for the long term? Should we even bother having this debate at all at this point? These are all the themes and topics we'll be exploring with our next guest, Trey Reik. He is the managing member of the Bristol Gold Group, and he has done extensive research on both of these asset classes, having followed both markets for a very long time. Trey is here to have this debate with me here today on Kitco. Welcome to the show, Trey.
Thank you for having me, Dave.
Why don't you set up the debate for us, Trey? You've looked at both asset classes in great detail. You've thought about this as an investor. What is this debate all about, and where do you stand?
So that's obviously a question that we could spend a couple of hours answering. But to try to boil it all down, my criticism, I think, of most of the gold Bitcoin debate analysis is that it's overly narrow. So at Kitco and in what I've been doing for the past 20 years, we've obviously spent a lot of time studying gold's investment cues. And there are more different opinions about why to invest in gold than, in my opinion, any other investment asset. Some people think it's an inflation hedge. Others look at it as a deflation hedge. There are some that consider gold a risk on trade. Others consider it a safe harbor. And what I've learned about Bitcoin, which I don't know anywhere near as well as I think I know gold, is that there is just a wide variety of investment cues and investment objectives in those that are investing in Bitcoin. So when I look at the broad spectrum, even though these things are related, some people look at gold or Bitcoin as a proxy for currency or money more broadly. Some people look at gold and Bitcoin as an investment grade reserve. There's at least 5 different categories of hedging that I would mention: portfolio hedging, market hedging, interest rate hedging, inflation hedging, fiat debasement hedging. And then you get into, decentralized asset and store of value. And I guess just looking ahead to my conclusions, if you're an investor, both institutional and retail, and you're looking for a long-term store of value, in my opinion, gold fits that bill, and Bitcoin's not yet really in the debate. And if you're looking for a decentralized asset, completely free of oversight or institutional involvement, Bitcoin is what you're looking for.
Okay, so Bitcoin is a more decentralized asset. Gold fits the bill as a better store of value. Let's explore some of these themes in greater detail. You've mentioned a few key terms: store of value, inflation hedge, investment vehicle, currency. We're going to go through all of this in today's segment. Let's start with the first one, store of value. You wrote in a research report recently about Bitcoin. I'm just going to read this paragraph. We concluded that while Bitcoin has proven to be one of the most profitable speculations in financial history, its volatility still precludes store of value investment function. So you've mentioned that gold is a store of value, Bitcoin is not. Can you elaborate as to why one fails and the other succeeds?
Yeah. One thing we have to add to our prior debate or conversation is speculation. So we went over all of the sort of store of value, money equivalent reasons that people would dabble in Bitcoin or gold, but we didn't mention speculation. So there are people who buy gold for speculative reasons. And in an April poll by Magnify Money, which is a subsidiary of North Carolina-based Lending Tree, 1,000 investors were polled, and those who admitted being crypto owners were asked, given a series of choices as to what their investment objective was, and 62% chose to get rich. So I don't know a lot of people who buy gold to get rich, but an awful lot of the trading, at least on the margin in cryptos, is in that realm. So why is gold a store of value? Well, if you are an individual or an aggressive investor or family office and your time horizon is 20 or 30 years and volatility is not important, I can't say that Bitcoin wouldn't be an appropriate store of value for that type of investor. On the other hand, if you're a pension fund or a college endowment and you're looking for a store of value, Bitcoin's volatility just quite simply mathematically eradicates it from consideration in the conversation of store value. For example, and we could parse Bitcoin's performance for days, but if you just look at the two most recent peaks, the 19,000 peak in 2017, in the prior 12 months, the trading range was 2,400%. And if you look at the more recent peak in 2021 at 64,000 and plus, the prior 15-month trading range was 1,600%. It went from 4,000 to 68,000. In the 2017 example, obviously Bitcoin declined from nearly 20 to 4,000, and we don't know what's going to happen yet in the 2021 example. But I would just suggest that there's an awful lot of institutional investors who would agree that until Bitcoin has a 12-month trading range below 2,400%, it's really not in the store of value conversation.
Okay. All right, let's just go over what you said. So, yes, you're right that many people do consider gold a store of value. Here's a counter argument I've heard, Trey. I'm just going to play devil's advocate because you have no one to debate with today except myself, I guess. Now, if you just take a look at Bitcoin's relatively short history, I say relatively because gold has, thousands of years. But since the last 12 years, if you exclude short-term volatility, which obviously, no one can argue with what you said, we do have very volatile prices for Bitcoin on the short term. But over the long term, Bitcoin has been one of the highest or strongest performing assets since inception in any market. In fact, Michael Saylor, one of the biggest proponents of Bitcoin, has tweeted about Bitcoin's Sharpe ratio, the risk-adjusted return. And the Sharpe ratio is, according to his calculations, 4.3, which is higher than most assets, much higher than gold. So how would you respond to that argument? How would you respond to the argument that since Bitcoin has been incepted, if you just hold it for the long term, it might actually be a better store of value than any other asset on the planet?
So there's two or three things I would say to that, and I want to be careful not to sound like I'm closed-minded about Bitcoin in any portfolio. I think the number one emotion that I feel about Bitcoin on a day-to-day basis is jealousy. I would love to have had a few Bitcoin along the way, and I frequently point out that no other asset in the history of the financial world has ever achieved $1 trillion valuation in anywhere near the time that Bitcoin did in that 12 years. So as a speculation, as a appreciating asset, Bitcoin is the biggest producer of wealth in the shortest period of time of anything in the history of financial markets. So, but that doesn't have anything to do with store of value. If you think 12 years is a long enough time to reach conclusions about any asset, then that's great. But Bitcoin is decades from adoption in institutional and endowment arenas, and I know that because I speak to them on a daily basis, and it's not even on the map yet. So and then we were discussing earlier the ability of gold and Bitcoin to serve as an inflation hedge, and we were talking about several periods in history. And I think it's important to recognize gold is not a permanent investment. I'm not suggesting that. And there are periods of time, like the 20 years following 1980, where gold has very little investment rationale, in my opinion. Interest rates were very high. Inflation was very high and falling. Productivity was very high. Productivity growth was high. And debt was low and savings were high. So in that type of an environment, in my opinion, gold doesn't really have much compelling portfolio utility. But we're in the opposite of all of those situations now. Obviously, interest rates are very low. Inflation is very low. Productivity is very low. Savings are zero, and debt's very high. So in that type of an environment, I would think over the next 5 to 10 years, gold is virtually a mandatory portfolio asset. Bitcoin has been a great inflation hedge, and it has a high Sharpe ratio only because it's gone from zero to a high of 64,000 in 12 years. I mean, you could put anything in the denominator of that and it would look attractive.
Okay, excellent points, Trey. One of the other arguments for Bitcoin as a store of value is actually the scarcity of the asset itself. It's capped at 21 million coins. Gold, on the other hand, is not million. Capped. Okay, 20 and 21 million.
21 million, right, 21 million.
Gold does not have, it does have a theoretical cap of the resources in the ground, but we're nowhere near, completely exhausting the Earth's resources of gold. In fact, researchers I've spoken to have estimated that the rate of mine production of gold have historically increased at the rate of population increase around the world. So we've got basically one asset that's capped and another that's not. So clearly the asset that's capped is a better store of value, right? Because of its scarcity. How would you respond?
Okay, so a couple of things there. Number one, if Bitcoin turns out to be the crypto winner, then how many there are will matter. If it doesn't, it won't. So there's a lot of things that are capped at 21 million that a lot of people have no use for in the world. If Bitcoin turns out to be the ultimate crypto winner and has wide adoption and usage, then that cap will mean something. Further than that, however, I personally believe that given all of the forks, et cetera, that have occurred with Bitcoin, there is no guarantee that algorithmic program will hold true. In other words, when we stop mining Bitcoins, we don't have a way to pay the miners anymore for their trouble and work and use of electricity, et cetera. So my personal view is that when we hit that hard cap, we can't 100% count on it being a hard cap if it suits the interests of the miners to soften or amend that cap. So we just won't know until we get there. Number two, by last count, I think there are about 10,500 cryptos, tokens, currencies, et cetera. My favorite introductory website, cryptomarketcap.com, suggests this morning that the market cap of the 5,000 or so of those 10,000 plus that have measurable value, the total value is about $1.3 trillion.
Yeah.
So I agree that Bitcoin has enormous leads in name recognition, function, true integrity of its decentralized network, proof of work. I mean, I get all of the arguments that Bitcoin maximalists make. On the other hand, Ethereum, which doesn't have the same decentralized architecture that Bitcoin does, has a lot of advantages that are being utilized and adopted. And the percentage market cap of Ethereum over Bitcoin has grown enormously. Even in the past 6 months, I think Ethereum's up a much greater extent over year to date, the past 12 months, as Bitcoin has these potential uses and adoptions hit the fore.
This next question isn't so much
21 million hard cap is 21 million hard cap. But there's 10,000 of these things. Now, to the Bitcoin maximalists, that's irrelevant. To most people, it isn't.
Okay. Fair enough. This next question isn't so much of a counter argument.
One last thing on that is the real point there isn't necessarily the hard cap, in my opinion. It's the stock to flow ratio.
Okay, so tell us about that.
5,000 years, gold has been a good store of money because its above ground stock is high and the amount that we mine each year is very low, say 1%, 1.5%. So you mentioned that in the future, there may be more mining of gold. And when we hit the 21 million, there won't be any more new Bitcoin. My retort to that would be maybe, but the next halving event is 4 years from now. And right now, if you do the math, Bitcoin has a less restrictive stock to flow ratio than gold. In other words, if you take the current rate of gold production over the above ground stock, that's a smaller fraction than the current rate of Bitcoin production over the outstanding stock of Bitcoin. So 4 years from now, it'll just about be even. But as far as right now, gold has a superior stock to flow ratio to Bitcoin.
Now, let's talk about assets as an inflation hedge. One of the core arguments for holding gold is that it, over the long-term history, it is a very good hedge against inflation. Actually, if you look at the data, there are periods of inconsistencies you can point out. You can argue that if you just compare apples to apples right now, if you just take the last 12 years since Bitcoin was incepted, gold's correlation with inflation has been inconsistent at best. We've had 2011 was the peak. It's flatlined from 2012 all the way to 2019. During that period of time, inflation has been rising on an annual 2 to 4% basis in the United States. Gold has not risen during that time on an annualized 2 to 4% basis while Bitcoin has more than outperformed inflation during that time period. If you just take a look at that time period, then one could make the argument that Bitcoin is a better inflation hedge, could they not?
Once again, you're looking at the past 12 years. Of course, we're measuring gold from its all-time high. When you do that, you're picking 2011 as a starting point where gold was 19,000. Number two, your inflation quote of 2 to 4% is wildly off. That's about 100% higher than what the actual number was. And number three, I agree with you. Gold is not an inflation hedge.
Okay, let's comment on that. Okay, because some gold analysts might disagree with your statement there. Can you please elaborate?
Sure. I think that as we discussed earlier, there's a wide range of investment cues for gold. One, and it's certainly the most popular, is that gold's an inflation hedge. Mm-hmm. To me, that's highly irrelevant. In other words, first of all, everybody quotes things like the CPI, right? So if the price of hedonically adjusted hot dogs in Houston goes up, why would you buy gold? I mean, if the price of hedonically adjusted hot dogs in Houston goes up, or even if you have something where healthy competition for goods and services makes all prices go up in an inflation, why should gold do any better than thumbtacks? Right. I really don't see the reason. On the other hand, if you have inflation, which is a result of monetary debasement, then I think it makes a lot of sense that gold should go up a lot faster than thumbtacks. And if you look at it from my starting point, when this real experimental Fed policy and age of QE and ZERP and all this, the Greenspan, Bernanke, Yellen, Powell era, and so we go back to 2000. Gold has destroyed everything. So there's no asset except for Bitcoin. I have to say, in the traditional asset realm, gold has outperformed everything on the planet since 2000. So it's actually been doing its job in serving as a hedge against this wild monetary debasement. But I don't. Go ahead.
Yeah. You said that my CPI, my inflation quote was wrong, and I was quoting headline CPI. So are you suggesting that we should not be looking at CPI as an accurate measure of inflation?
We haven't had 4% CPI inflation in the last 10 years. You said 2 to 4%.
Yeah, it was close to that around 2011, 2012, but it's come down around it's hovered around 2 to 4%
for a nanosecond. Yeah, so
exactly for a nanosecond. Yeah.
Right. But that's also the beginning of the period that you quoted. So you're just, that's fine. You're just you're playing with starting dates and ending dates in the time frame. But over, as I mentioned, in the 2 decades following 1980, gold didn't make a lot of sense. The 10 years that you mentioned, gold had just gone from 280 to 1900. So it was certainly due for a correction. And I don't think 12 years is in my opinion, a relatively important or relevant time frame to measure some of the things that we're talking about.
So you mentioned to me offline, Trey, that many Bitcoin investors were prior gold investors who were frustrated. What do you mean by that statement, and what exactly were they frustrated at?
That's a great question. So I want to first say that I think it's a really bad idea to criticize Bitcoin out of hand, really on any level. I mean, it's 12 years old. It's been one of the most successful inventions in the history of the universe, and it's performed, very admirably. What I have noticed is that, as with gold, the range of investors, retail, institutional, et cetera, that are interested in Bitcoin is much wider than people, I think, commonly recognize. So I mentioned earlier that most retail investors are in there to get rich. The Bitcoiners would say, yeah, but that's a real small percentage of the total. And I would say, fine. I have never been introduced to a single real Bitcoin thought leader who is not a frustrated gold investor. All of these guys went through a period of disenchantment with fiat currency debasement, the Fed, enormous debt problems around the globe. All of these guys went through a gold period. And I will tell you that I think one of the biggest differences between these folks and folks who are still investing in gold is patience. And I think gold is frustrating. It's not a trained seal. You just mentioned the past 10 years when perhaps we all would have expected gold to do better. But on the other hand, it does its job over a long period of time. That's the whole store of value concept. People who own gold frequently don't own it to get rich. They own it to stay rich. But I will tell you that at the tippy top of that Bitcoin evangelist totem pole, all of those guys are particularly negative about gold because they are frustrated gold investors and they've moved on. And again, this leads to part of my jealousy because I've been doing this for 20 years and I think gold's done an admirable job.
Sure.
And, here in this, you keep mentioning 12 years. It's really 5, right? Because the first 7 of the 12, nothing happened.
Yeah, absolutely. And I have an argument against Bitcoin. This is not an argument for gold. It's just an argument against Bitcoin because I've argued for Bitcoin long enough now.
Okay.
You've talked about this in your report too. Now, Elon Musk has had tremendous influence in 2021 on just the price action, just through his tweets. Now, as an investor or even a trader, I don't want my holdings to be influenced by one person's tweets. I mean, that doesn't to me, that doesn't sound like an argument for a store of value or a reliable trading vehicle either way. Yet a lot of people continue to hodl, so to speak. Right.
So on February 9th,
comment on that.
Elon tweeted, he didn't. There was a press release. He has an ongoing Twitter feed related to Bitcoin and other cryptos. Most of the stuff that he writes, we couldn't say publicly on your network. But on February 9th, he said that Tesla had purchased $1.5 billion worth of Bitcoin, and Tesla might soon accept Bitcoin in payment for its electric vehicles. 2 weeks later, it was up 48%. And I think that the Bitcoin crowd don't recognize that the 48% had to do with Elon's tweet. We're gold investors. Over my career, I have frequently confused short-term performance with validation of my long-term gold investment thesis. It's a natural human reaction. So if you're a Bitcoin enthusiast and Bitcoin goes up 48%, you're likely to downplay the importance of the Musk tweet. Well, it turns out Musk has 55 million Twitter followers, 55 million. There's only 8 people in the world who have more, and it's people like Barack Obama and pop singers. So that's a lot. And in that period of time, in February and March, he was adding Twitter followers 150,000 per day, 7 days a week. So 7 days a week, if you had 150,000 new people choosing to follow you, you'd have a pretty big ego too. I mean, I think that's an incredible statistic. On the other hand, when China did its most recent crackdown, the week after Elon issued his dinner time tweet at 6 o'clock that Tesla would not accept Bitcoin anymore in payment for Teslas, when in fact no one's sure anyone ever paid for a single Tesla in the intervening 2 months, he did back away because of these carbon profile concerns. I don't want to get sidetracked into that whole situation. But in that 1 week period from the dinner time Musk tweet to the PBOC actions, I think we're talking May 7th to 13th, Bitcoin was down 50%. So that's not a store of value, and in any way, shape, or form. That's a really exciting speculation that you better have 24 hours a day to follow.
Yeah, sure, absolutely. So let me just sum up, I would guess, your thesis on both assets. They're different things, obviously. They serve different purposes for different people. And so, it's really difficult to compare one or the other. Putting all this together, then, Trey, what is your outlook for the performance of each of these assets going into the rest of the year or perhaps, longer term?
So again, just to repeat my differentiation, to those hardcore hard money fans, gold will never have the decentralized ethos that Bitcoin commands, and so they'll never go back. It's Bitcoin, uber alles, to use a phrase, above everything else. For gold folks, I still think it's a much wider range of store of value, type considerations. And I think there's also a really important distinction between institutional and retail type of approach. By the way, I'm not suggesting gold has a phenomenal institutional reputation. It does not. Fewer than 1% of institutional assets are directed at gold. And I actually think that number is going to be going substantially higher over the next 5 to 10 years, because I think there will be a disinvestment in the fixed income side of the ledger. We don't have to get into that. In terms of where I think these things might go, which is obviously a low return endeavor, but I'll be tricked into it because this has been such a nice conversation.
It's what the people want to know, Trey. It's what the people want to know.
I have no idea, obviously, but I do think, believe it or not, that gold will play, just very recently, and these are very small details, but the Bank of Thailand announced yesterday that, they had increased their gold reserves. Hungary has just announced in the last month, Serbia, countries, Poland, are starting to add to their gold reserves again. It's not my decision. It's what central banks decide. I think there will be a role for gold in the monetary regime of the future. The Bitcoiners think Bitcoin will play a role in the monetary regime of the future. If they're right, Bitcoin's going substantially higher. If I'm right, I'm looking at sort of a 20% cover clause type deal. So the Fed's balance sheet, which is in a ridiculous level of 7 trillion, let's just use that, and we assume 20% cover clause with the 261 million ounces of gold that we have in Fort Knox, supposedly, but it doesn't matter if we have them there. It doesn't really matter whether they're there or not. But assuming that they're there, that'd be about $5,200 on the gold price. So with the amount of gold that the U.S. already has, we could do a 20% cover even on a $7 trillion balance sheet at $5,200 an ounce. So I look at something in the $5,000 range as eminently reasonable. We were just at $2,100, a few months ago. So within the last year. So 5,000 is, a rough double from here. And, I think that's eminently doable. With Bitcoin, I personally believe that we're heading a lot lower in the near future. And in terms, just because of technicals and the fact that most of the folks who could buy Bitcoin have, and most of the people who have charters to do it have. And I think over the long run, I think there's still a lot of question marks about what Bitcoin's ultimate role will be. So I think lower in the near run, and more than likely substantially higher over the long run. But I have no idea what that time period will be.
And final question, just given your own personal outlook that you've just stated, would you buy both if you had to invest? If you had to start from all over again, if you didn't have Bristol Gold, and if you had to invest with your own money, would you buy both? Would you buy one? Would you buy neither? What would you do?
I think that the overlap of Bitcoin and gold is a smaller portion of the total ecosystem of investors than people recognize. So if I were an individual who were independently wealthy and I was looking to preserve that wealth over 20 years or 30 years, I would think that equal type investments in Bitcoin gold might make sense. In the institutional world, I just don't think there's any room for cryptocurrencies in the next 5 to 10 years. And I think gold's role will be increasing. And as I mentioned to you personally, all I have is jealousy for the fact that I haven't been involved in these past 5 years, because it would have changed my life.
Well, it's not too late, Trey. I mean, according to your own outlook, it's going to go a lot higher, so it's not too late.
The Bitcoiners tell me that every day of the week. It's not too late.
Trey, that was excellent. I very much enjoyed our conversation today. I hope to see you again soon, and we'll continue our discussion. Thank you very much today.
Thanks, David. Good to speak to you.
And thank you for watching Kitco News. I'm David Lin. Stay tuned for more.